Welcome to Daily Rates Live with the Mortgage Calculator. Today we're going to go through some live mortgage rates and then we're going to talk about bridge loans. So remember, every day, 11 a.m. Eastern, we do this show and we do a deep dive into a different topic every morning. And today's deep dive topic is going to be bridge loans. Now, we're going to wait just a minute here to go live on all the different platforms because we are streaming this live on Facebook, LinkedIn, and YouTube. So thank you, everybody, for tuning in on the different channels. Feel free to drop a comment there in the chat. We put the chat up on the screen here. I see some comments were already coming in, so we appreciate that. And go ahead and keep dropping comments as you tune in. But thank you for the comments, Jules, Michael, Owen, Ashley. Appreciate that. We'll get started here in just a moment. All right. Okay, it looks like we are live on all the different platforms, so we can go ahead and get started. As you tune in, keep dropping comments there in the chat, and also feel free to drop any questions that you have in the chat as well when we do our deep dive topic. Welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. What we do on this show every morning is go through some live mortgage rates, and then we do a deep dive into a different topic. Today's topic is going to be bridge loans. So at the Mortgage Calculator, we specialize in non-QM and working with investors. And this is a big product that we are used to dealing with. So our sales manager, Jose, with 28 years of experience, is going to take us through a deep dive into bridge loans. But before we do that, just like we do every morning, we will pull up the live rates. So Nick, if you're ready, let's go ahead and pull up our pricing tool and see what the market is looking like this morning.
All righty, switch my screen and we will check it out. So this is our pricing tool for our team of mortgage professionals. This will show us the rates and the APR for today. It is October 18th, just after 11 a.m. Eastern. So all of our general programs are live here. If you would like a full breakdown, a full loan estimate of all the itemized fees that go into the APR, please get with our team members. We have over 400 licensed loan officers in 24 states, and we can do our business purpose loans, such as our DSCR and most of our bridge loans that are commercial, in 44 states. So we will set up a scenario so we can compare the APR across the programs. We'll set up a loan amount of $400,000, the LTV of 80% loan, 20% down payment. We'll have the computer find the lowest rate that we can offer here. And we'll compare our conforming programs to FHA, usually the next best option. And then we'll check out our expanded guidelines, also known as non-QM, where we have over 5,000 additional options. We also have VA and USDA. We don't do those live because VA is only for eligible vets and active service members. Since not everybody's eligible, we don't do that live, but just let us know if you need a quote. We can quote it, no problem. And same with USDA. It has to be a eligible property in a USDA eligible area. So if you do happen to be shopping for one of those, just let us know. We'll start with conforming conventional, purchase, 30-year fixed, standard loan, primary occupancy, single family home, 1 unit, state of Florida, county Miami-Dade, all the basic setup. And for all the demos, we'll use an estimated credit score of 760 and an estimated debt to income ratio here of 40%. So with these settings, let's check out the conventional options today. All right, so again, another interesting thing. I have to preface this a little bit here. So the best conforming option, because the rates have gone up a little bit since yesterday here, 7.375, 2.375 discount points, puts the final APR at 7.587. But again, because the rates are going a little bit crazy, we have a unique portfolio option that is available that is beating the standard conventional. So today for primary, this is beating. It usually beats for investment, but it's beating for primary as well. So here we have 7.25 rate for 2.5 discount points. That puts the final APR at 7.467. So good option here for us to use our very unique Still same full doc tax return program, but it's not actually conventional. It's a portfolio program. So our partners will actually be holding this loan, and they can obviously beat the standard Fannie and Freddie pricing here today, at least. So great option here. Definitely check out those unique portfolio options as well as our standard conventional. Now, if for any reason our customer doesn't qualify for those standard programs, we'll set up the same scenario, and this time we'll compare FHA. That is typically the next option for most borrowers, as it has a little more leniency on credit issues, as well as a much higher debt-to-income ratio we can use. For the demo, though, we'll keep everything exactly the same, so we can compare apples to apples across the programs from FHA to conventional. So, with the same settings, let's see what FHA has this morning. So FHA has gone up quite a bit as well today. 6.75 rate, 2.25 discount points and costs. Puts the final APR 7.385. So still a little bit cheaper than conventional. Remember, conventional was 7.4 something. But FHA jumped a little bit more yesterday, it looks like, in reaction to the markets than conventional did. So that gap between them is almost closed today, but again, it will change tomorrow. So for a customer that qualifies for both, FHA is a touch cheaper today. Some days it's quite a bit cheaper. And for our customers that must use FHA, this APR does include the upfront and yearly mortgage insurance. And it's definitely a great improvement from prior FHA programs. Now, where we love to specialize here at the Mortgage Calculator, if there's any reason our customer doesn't qualify for FHA or conventional, many other banks or lenders will have to deny that customer. But that's where we love to say yes and provide the solution with our expanded guidelines, also known as non-QM, where we have over 5,000 additional options beyond the standard here. So we'll keep everything else the same, except now we have a new option pop up for income. So full doc is 2 years of tax returns. That's what we use for FHA and conventional. So we'll typically choose a different option here when we select non-QM. We have asset-related programs, business bank statement programs. The investor programs are just for investment properties. We'll show that in a minute. Personal bank statement 12-month is what we use for the demo. That's the most popular. We have RSU, stated income, VOE, 1099, P&L, no income, all kinds of different options. We have a few shows on that, so check out the past episodes. But for our live pricing, we always use the 12-month personal bank statement, and that's for our self-employed borrowers. Many times it's our self-employed borrowers. When they submit 2 years of tax returns for a conventional program, may not quite qualify or just may not quite get the income they need to get the home they really want. So we'll solve that problem. No tax returns at all, just their last 12 bank statements to calculate a new debt-to-income ratio using just their cash in the bank, no tax returns at all. So usually our self-employed borrowers will qualify for double or triple the income using this method. So let's check out the bank statement options today. So rates are going crazy. This is obviously not viable, so we were not going to look at that. So let's start here. So the portfolio option, again, is a great option. The full doc is not the option here. 7.625 rate, 2.5 discount points in cost, puts the final APR at 7.742. So pretty amazing there for that special portfolio program. And then you see some of these other standard bank statement options. There's dozens of them at a little bit higher rates and costs, may allow things like bankruptcies and foreclosures to get around other guideline issues, as well as may use a different method to calculate the income. So tons of different options, dozens if not hundreds of different variations. Please get with our team to find the best one. And for our final two demos, we always do investment properties. This is probably going to get a little bit crazy since rates went crazy yesterday. So we'll start with investment property. We'll do 80 LTV, same loan amount, same everything. You can buy down investment properties a little bit lower, so the lowest rate option will be a little bit different there. And we'll compare our conforming conventional, which since rates went up, probably going to look a little bit crazy, with our expanded guidelines, also known as non-QM. Government programs, FHA, VA, USDA do not work for investments. So we'll simply compare these two options, start with conforming. Everything else will stay exactly the same. All we've edited here is the occupancy. So let's see the adjustments conventional has. Whew, yeah, a little bit pricey there. So the best option we can get is obviously that portfolio option we keep mentioning because it doesn't have the loan level price adjustments, which makes a huge difference. So in this case, if our investor is looking for a full doc option, this portfolio is definitely the way to go compared to agency. Portfolio option 7.125, 3.5 discount points in cost, puts the final APR 7.375. Amazing. The best comparable conventional option is quite a bit different because of the price adjustment. 7.875 rate, 4.75 discount points in cost, pushes the APR up to 8.167. So good option for our customers that obviously can use those programs, but I definitely would recommend to quote the portfolio option for all of our loan officers out there. These ones probably wouldn't even be compliant here with this many points because conventional is just crazy right now. So definitely amazing to have an option such as this portfolio program to compare to investments. For our final demo though, we usually want to present some non-QM options. So we'll do investment again, 80 LTV again. We'll set up the same quote again, and this time we'll use expanded guidelines for investment properties. And the most popular income option for an investment property under non-QM is going to be our DSCR. That is because it doesn't require any income or employment. We simply use the estimated rental income to determine a DSCR value. It stands for debt service coverage ratio. If the estimated rents can cover the PITIA of the mortgage, aka the property cash flows, that's a ratio of 1.0 higher. We even have options for ratios under 1.0. For the demo, we'll put 1.5, which is the highest value the computer accepts, so we can see all the programs pop up. And prepayment penalty is the final thing to select. 3 years is what we always choose for the demo. We can choose 0 prepayment, that will cost more and limit the amount of programs that show up. We could also select 5 years, which will cost less for our customers that want to keep the property longer, but will limit the loan programs. So 3 years is standard. That's what we'll use here for the demo. So let's check out the DSCR options. And just as yesterday, we have 2 options beating conventional. So that portfolio option is great, right? These aren't beating that portfolio option, but these do beat conventional. So again, the last week or so, DSCR beating conventional is absolutely amazing. Never really thought that would happen, but with conventional rates the way they are, DSCR is the way to go. I'd say 100% of investors would use a DSCR program compared to a conventional agency program, but there is that cool portfolio option as well. Top option here for DSCR, 7.75 rate, 3.5 discount points in cost, puts the APR just a touch under 8 at 7.9 APR, which again beat all the conventional options, and even this second option beat the conventional as well. So 2 options for DSCR that beat conventional. Some of these other ones at a little bit higher rates and costs may allow exceptions like bankruptcies and foreclosures, may allow us to calculate income differently, such as short-term rental income, may allow special property types like manufactured homes or mixed use, things like that. So tons of different options here under the DSCR programs. Please check some of our past episodes to view those. All right, let me go ahead and switch my screen then. And we'll get into today's topic. So, bridge loans. I'm going to let Jose take this over. There's 2 different ways to say bridge loan. So, Jose, since you have the quotes, I'll let you present which direction we're going here. Bridge loan is kind of a general term, meaning 2 totally different things for investors or for someone with a primary home thinking they need a bridge loan to get a new primary home, right? So why don't you explain the 2 different ways people use the term, and then let's go into the demos here.
All right. Bridge loan has been used now to refer to many different type of transactions. But what the main point on a bridge loan is, it's a short-term transaction. That's why the term bridge, right? It is a bridge between where you are now and where you want to be. And there's a lot of reasons why you would use it. 2 main reasons. For example, you could have a seller who's selling their current property, and they already have identified the property that they want to buy. Great deal. They don't want to lose the opportunity to get that property while their property is still on the market. So they could get a bridge loan. Hopefully, they have equity in their current property. They could get a bridge loan, purchase that property while they sell theirs, and then turn around and cancel the loan once they or pay the loan off once they sell their property and have their proceeds. Um, the bridge loans usually tend not to have a prepayment penalty because of that. So obviously, the interest rate takes that no prepayment penalty situation into consideration. So that's one reason you would use a bridge loan. Another reason you would use a bridge loan would be the investor who is buying a property. I mean, obviously, these could be refis, but the investor who's buying a property who wants to do some repairs to that property and then either rent the property out or resell the property, as in your fix flip loan, or I guess we call fix and hold loan if they're going to keep it as a rental. So so your fixed flip loans are all bridge loans. They're all short term loans, no prepayment penalty, and these have a whole different parameters depending on what type of bridge loan you're doing, right? If it's ARV, obviously it's going to be looking at the profit in the deal to determine loan amount. If it's just a regular bridge loan, you're going to be looking at just a regular underwriting guidelines to determine maximum loan amount. So I do have some purchase options for you today with a couple of different scenarios like this, and one that you probably may not be aware of. It's the first one that I have here. This is um, this option is available a number of different outlets. This is the maximum 50% LTV bridge loan. They have a bunch of cool names when you're out there looking for the program options. But this is a very flexible program, obviously, due to only 50% max LTV, similar to some of your hard money options. Uh, what is important to note regarding the Streamline underwriting option is that there's no seasoning of ownership required. So that's very important if it's a refi, for example, and you're looking to get some cash out to do some repairs and you got a good deal on the property, no seasoning of ownership required there. This is available as a 3-year fixed term or a 30-year fixed loan amortized over 30 years. And real important to note, let me make this a little bigger here. Real important to note is the property types. Notice commercial is on there as an option, office, retail, warehouse, self storage, and automotive. Automotive, especially a tough category there. Mixed use and multifamily. So, this program, due to the low LTV, available for a lot of really cool options there. And best of all, look at the rate, right? The par rate. Now, this is a borrower paid product, right? But the par rate here is 9.24, right? So that's a very good rate for that product. Remember, it's 3-year term or 30-year. And then with a 1 point buy down, you can get 8.865. Those are amazing rates when you consider this is essentially a hard money type loan. This is a pour anything in the bucket kind of loan that you want because they handle any kind of property, strictly equity based loan. Credit score also, obviously, but equity based loan. So now we have a more standard quote unquote bridge loan, right? In this case, this is maximum 75% LTV for this 24-month term product. Now, I will put out there are a multitude of bridge options. These are by no means the only options out there, but I just wanted to highlight some bridge types to whet your appetite so then you can go hunt down and see which is the best one to fit your borrower's needs. Um, but certainly, bridge loans are very, very plentiful in the industry. So, this one here, 24-month term, higher LTV than the other option, but notice the more restrictive, more typical property types, right? Single family, condos, townhomes, and 2 to 4 unit properties, small residential multifamilies, duplex, triplex, fourplex. And again, due to the higher LTV, you're looking at a higher cost. In this case, this um, at 11.24 uh, interest rate, there is a cost, a loan discount of 2 points. That's minimum fee there. And then from there, you can do a buy down if you want. For each point that you buy down, it's 0.375 in the rate. But remember, this is a 2 year product, only 2 year term. So probably not a big incentive to be buying down the interest rate in this type of scenario for such a short term benefit. And now our last example here of bridge loans. We're talking about the true fix flip bridge loan. Now, this is just, I didn't set this up as a fixed flip to show all those different profit margins, but I did set it up to get the quote. Uh, this is a maximum 1 year term. And again, here in this scenario, after I put in my numbers, it gave me a 56% loan to value based on my ARV of 500. But it gave me, but you are able to get a maximum initial distribution on the purchase of 80% loan to cost. So whatever is the as is value, what you're purchasing the asset for, they will finance 80% of that initial purchase, and then they base the maximum total loan amount on an 80% loan to value based on the ARV. In this case, we're only at 56% of our ARV value, but we are looking in this case 11.24. They did loan us $280,000 in my scenario. 11.24 rate at a cost of 2 points for this product. So again, you see how bridge is a very broad term that can apply towards a multitude. It can be an actual uh, purchase loan, 50% with no holds barred. It can be a 75% LTV short term purchase only. It could be an ARV loan. So many different bridge loan options out there. And it can be used again for your seller looking to transition from their current property that they own to one that they want to buy by getting a bridge loan on their current property that is currently for sale. So a listed property for sale can get a bridge loan because the purpose of that loan is to give you the money to buy what you're going to buy so you can then finish selling and pay off the loan.
Okay, the only question I see here was actually referring to earlier when we were going over the rates, which was if they're using FHA 3.5% down, can they still qualify for the 6.75 rate that Nick was showing as a 20% down?
It'll be a little bit different rate, but FHA doesn't have that many adjustments to the programs. I believe the MI is adjusted at the LTV, but the loan level price adjustment shouldn't be that much. But yeah, you would just quote it at that LTV. We just don't do that on the show because it would be a little hard to compare the low down options, right? We want to do a standard program that allows us to compare against all the stuff, right? There is no bank statement option at 96.5 LTV. So it would be a little misleading to do a presentation where the bank statement option is totally different. So we want to make sure we choose an LTV that works across all the programs. So Jonathan, if you want to get a specific quote at a specific LTV, just let us know. We can quote in just a couple clicks, no problem.
All right. I don't see anything else, so I think we can wrap it up. Remember, we do this 11 a.m. Eastern every single weekday where we go through the live rates and then we do a deep dive into a different topic. So tomorrow we'll be going through a different deep dive topic. But thank you, everybody, for tuning in. Thank you, Nick. Thank you, Jose. We'll see you tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Take care, everyone.
Thanks, everybody.
Have a great day.